Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In this video, we'll break down how these funds work and what makes them different from traditional ETFs. Let's get started. Here's why they're more volatile. Growth stock dependence. Thematic ETFs often load up on companies trading at high valuations based on future potential, not current profits. These stocks get hit hardest when markets turn cautious. Sentiment-driven performance. Unlike steady dividend payers, themes like AI or blockchain surge on hype and deflate just as fast. ARK's rise and fall mirrored this perfectly. Low diversification. A broad market ETF might hold 500-plus stocks. Thematic ETFs often hold 30 to 50, so a few bad picks can drag down the whole fund. If you can't stomach double-digit drops in weeks, these aren't for you. Concentration risk. Thematic ETFs bet big on one idea, and that means putting too many eggs in one basket. ARK, for example, once had over 10% of its money in Tesla alone. If the theme stumbles or a top holding crashes, the entire ETF feels the pain. Key risks of heavy concentration. Single stock domino effect. A major holdings collapse like Zoom's post-pandemic drop can tank the whole fund. Theme obsolescence. What if the theme fades? Think of 3D printing ETFs a decade ago. Hot until they weren't. Sector overlaps. Many thematic ETFs unknowingly pile into the same stocks. Multiple AI ETFs, for instance, hold NVIDIA, creating hidden risk if one stock falters. Broad ETFs protect you from these pitfalls. Thematic ETFs? They're all in. Make sure you're okay with that. Performance in bear markets is another concern. Thematic ETFs often lag when investors flee risk. ARK's tech-focused approach shines in bull markets, but struggles when safer sectors like utilities or consumer staples lead. If you invest in themes, prepare for rough patches. Sometimes long ones. Keep this in mind. Thematic ETFs reward conviction but punish overconfidence. Know what you're signing up for. How to evaluate and choose thematic ETFs. Thematic ETFs can be exciting, but not all are created equal. Picking the right one requires digging beyond the buzzword theme to understand costs, liquidity, and whether the fund fits your risk tolerance. Here's how to separate the winners from the hype. Key metrics to consider. Expense ratios matter more than you might think. Thematic ETFs often charge higher fees than plain vanilla index funds because they're actively managed or target niche markets. For example, ARK Innovation ETF, ARKK, has an expense ratio of 0.75%, while a broad market ETF like SPY costs just 0.09%. Over time, fees eat into returns, especially if the fund underperforms. Check these three numbers before buying. Expense ratio. Aim for under 0.75% unless the strategy justifies it. Liquidity. Look at average trading volume and bid-ask spreads. Thinly traded ETFs can be hard to sell without losing money to slippage. Manage your track record. Some thematic ETFs like ARKK rely on star managers. Research their past performance in different market cycles. Hot hands can cool fast. Diversification within thematic ETFs. Thematic ETFs already focus on a narrow slice of the market, so don't double down by making them your entire portfolio. Even if you love a theme like AI or clean energy, limit exposure to 5 to 15% of your investments. Here's how to balance them with other assets. Pair with broad market ETFs. Use an S&P 500 ETF as your core holding, then add thematic ETFs for targeted growth. Watch overlaps. Many thematic ETFs hold the same stocks. If you own 3 tech-themed funds, you might be overexposed to companies like Nvidia without realizing it. Rebalance regularly. Thematic ETFs can swing wildly. Trim winners and add to losers to keep your portfolio from getting lopsided. Think of thematic ETFs like seasoning. Just enough adds flavor, but too much ruins the dish. Case study. ARK Innovation ETF. Thematic ETFs like ARK Innovation, RKK, show what happens when you bet big on bold ideas. This high-profile fund became a poster child for thematic investing, soaring during tech booms, but struggling when markets turned skeptical. Let's break down how it works and what its roller coaster ride teaches investors. ARK Innovation's investment strategy. ARK Innovation ETF targets disruptive innovation, a theme covering tech-driven changes that reshape industries. Managed by Cathie Wood's ARK Invest, the fund picks companies poised to grow from breakthroughs in AI, genomics, blockchain, and robotics. Unlike traditional ETFs, ARKK leans heavily on active stock selection, often doubling down on controversial picks before they hit the mainstream. Top holdings reflect its high-conviction approach. Tesla, EEVs and automation. Coinbase, crypto and fintech. Zoom, remote work infrastructure. Exact Sciences, cancer detection tech. The strategy banks on long-term trends, not quarterly earnings. For example, ARKK invested in Tesla years before most Wall Street analysts saw its potential. But this approach also means taking big risks, like holding unprofitable growth stocks during market downturns. Performance analysis. RKK's story is one of extreme highs and lows. The surge, 2020, gained 150% in 2020 as lockdowns boosted tech stocks. Outperformed the S&P 500 by over 100 percentage points, became the top-performing U.S. equity ETF that year. The Reckoning, 2021-2023, dropped 67% from its 2021 peak as interest rates rose. Underperformed the S&P 500 by 40-plus percentage points in 2022, saw outflows as investors question its high volatility holdings. The ETF's swings highlight a key lesson. Thematic ETFs thrive in bullish, low-rate environments, but suffer when investors favor stability. ARKK's top holdings, like Tesla and Roku, traded at lofty valuations, making them vulnerable when market sentiment shifted. What's next for ARKK? It remains a high-risk, high-reward play on innovation. For investors, it's a case study in balancing conviction with diversification. Thematic ETFs, like ARK Innovation, offer a way to bet on trends you believe in without picking individual stocks. They can deliver big gains when their themes take off, but they also come with higher volatility and concentration risks. RKK's roller coaster performance proves that while these funds can soar in bull markets, they can struggle when sentiment shifts. If you're drawn to thematic investing, keep allocations small and balance them with broad market ETFs. Research the fund's holdings, fees, and track record before jumping in. Are you ready to take on the risks for the potential rewards? Thematic ETFs might fit your strategy. Just know what you're signing up for. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.